All right, let's get right into it. When you think about the stock market in October, what's the first thing that pops into your head? For a lot of people, it's fear, right? It's famous for some of the biggest crashes in history. But what if I told you that same month has a secret identity? That it's also one of the market's greatest heroes. Today, we are unpacking the October paradox.
And this slide, this really gets to the heart of it all. On one side, you've got October phobia, this gut feeling, this real fear of a market collapse. But on the other side, it has this nickname, the Bear Killer, a month that has a long history of stopping nasty downturns right in their tracks and kicking off some seriously powerful rallies. So, which one is it? Is it a monster or is it the turning point we've been waiting for? Let's figure it out.
To really understand the opportunity here, we first have to respect the fear. And believe me, that fear didn't just come out of nowhere. It's rooted in some of the most dramatic, most unforgettable moments in all of financial history.
I mean, just look at these dates. They're basically burned into the minds of investors. We're talking about the Great Crash of 1929, which kicked off the Great Depression. Then you have Black Monday in 1987. The Dow just cratered, dropping an absolutely jaw-dropping 22.6% in a single day. And of course, more recently, October was right at the heart of the 2008 global financial crisis. Yeah, this is where October phobia comes from.
So, with a track record like that, you'd think the case is closed, right? October is clearly a month you should be afraid of. But this is where our story takes a really interesting turn. What if those massive headline-grabbing crashes are actually hiding a much more positive and, frankly, a statistically more important truth?
So let's do this. Let's push all that emotion and fear aside for a second and just look at the hard numbers. Because when we dive into the data from the Stock Trader's Almanac, a completely different picture of October starts to take shape.
And here it is. This might be the single most powerful piece of evidence against October phobia. Since World War II, a staggering 13 bear markets have died in October. Just let that sink in for a minute. While everyone is hunkering down expecting the worst, history shows that October is very often the month where the bleeding finally stops and things start to turn around. It's not a market killer, it's a bear killer.
And look, it isn't just about ending the bad times, it's about starting the good ones. If you look at the average monthly returns going all the way back to 1950, the S&P 500 is actually up, on average, almost a full % in October. Now, it's not the best month of the year, but it's solidly positive, which completely blows up the myth that it's a guaranteed loser. And you can also see here how small-cap stocks, the Russell 2000, have struggled just a tiny bit. That's the key detail, and we're going to come back to it.
But wait, it gets even more interesting. It turns out that not all Octobers are built the same. There's another layer here, because the presidential election cycle, well, that can make a really big difference. And check this out. In the years that come right after a presidential election, October's performance actually gets even better. The average return for the S&P 500 jumps up to 1.3%. This pattern suggests that once an election is over, that certainty, it doesn't even matter who wins. It tends to give the market a nice little boost as we head into the end of the year.
Okay, so we've seen the what. We know October is statistically positive and it's a bear market ender. But now let's talk about the why. What is actually going on under the hood that makes this month such a critical turning point?
Well, it really comes down to this well-known thing in the markets called seasonality, and specifically a pattern known as the best 6 months. For decades, the data has been crystal clear. The period from November all the way to April consistently, year after year, delivers the strongest returns. So October isn't just another month on the calendar, it's the gateway. It's the moment we transition out of the weaker half of the year and into the historically strongest period for stocks.
And this isn't just some broad market trend either. You can see it happen in specific sectors that often start their best runs of the year right in October. I mean, look at these powerful average returns for transportation, financials, materials, and consumer stocks. And notice semiconductors, a huge part of the tech world, they often start their run a little later in October. This is literally the market rotating into its winter power hitters.
Okay, so we've torn down the myth, we've looked at the real data. Now let's get to the most important part. How do we turn all of this knowledge into a smart strategy? Well, the Stock Trader's Almanac actually lays out a pretty clear and simple playbook based on all these historical patterns.
It's a simple 3-step approach. First, start watching for buy signals right from the get-go, October 1st. The Almanac specifically suggests using technical indicators. Those are just tools that help you spot a shift in the market's momentum. Second, focus your attention on those seasonal leaders we just talked about.
the sectors that are historically set up to do well. And third, use any dips as a chance to get in. The data shows that weakness, especially later in the month, has often been a fantastic time to buy into tech and those small cap stocks right before they start their big seasonal run.
So when you put it all together, the real story of October isn't about fear and crashes. It's about transition. It's about opportunity. The data strongly suggests that, yeah, the volatility is real, but the bigger mistake, historically, has been to stay on the sidelines in fear and completely miss that powerful shift into the market's strongest season. So the question isn't whether October will be shaky, it's whether you'll be ready for the turn when it comes.